Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Chahine.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've bid a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel, here with Joel L. Chahine and Dennis Dick. On the show today, a pair of guests for you, including one new one. Will Rhind will join us at 8:15. He's the CEO of GraniteShares, a commodity-focused ETF firm. So we'll talk about all the commodities, oil, gold, metals with Will, and then we're going to be joined by 8:35 by Nick Chahine at 8:35, as we are every Tuesday. But before we get to that, we got to get to the markets. Joel, what's doing?
S&Ps are traded in the green here by a couple points. Your pre-market high just over 48 at 48 and a quarter. Your pre-market low down at 43 and a half. Caught a bounce late in the day yesterday and following through. All-time high in the double top, 25.50 and 25.50.75. That's your target on the upside. We have crude trading up 59 cents at 50.17, 16 cents off the high of the day. And gold embarking on 1,300, trading up nearly $10, up 9.70 at 12.94.70. Silver, likewise, has cleared the $17 level, up 26 cents at 17.23 and a half. Dennis, how you doing at 8:02 on this Tuesday morning?
Just looking at this market and just saying you can't fade anything in this market anymore. And I'm going to give you a lot of examples. But, you know, we've talked about this before, how it's the momentum market. If you're fading moves, you're getting rocked. And let's just go to Walmart here, because yesterday, was there a headline in Walmart, Spencer? I'm just curious because I can't remember, goldfish memory here, but Walmart was up $2 yesterday. What was the headline in Walmart that was driving it up $2 in the regular session and then another 50 cents after hours? Was there a headline?
Yesterday during the day?
Or yesterday morning? Was there some reason that Walmart, and I'm just going, just the charts.
Well, remember, I mentioned that they're offering a $25 discount to anyone who buys a Google Home product through their Walmart.com account.
Okay, so there wasn't a headline that started to drive
Dennis, it did get some positive ink and Barron's over the weekend.
Okay, the Barron's always help it too. The Barron's pop.
Yeah, are you waiting in line to return items? Walmart says it will soon just take 35 seconds.
Okay, so good reasons for maybe the stock to pop yesterday, but better reasons for the stock here to pop today. Last night it was trading up after hours, and I was like, I don't see an upgrade. I don't see that much. It kind of felt a little bit like a smaller version of Mile Labs from the day before. But anyways, obviously somebody gets the memo again, because Walmart comes out this morning at 7:30 with the news that somebody appears to have known before. What was the news, Spencer, there from this morning?
They are reaffirming their fiscal year 18 guidance. They reaffirmed their EPS for the fiscal year. They also reported a $20 billion buyback plan, and they see their fiscal year 19 EPS up around 5% year over year.
So Walmart here now trading up $2 on that news. So big move here for Walmart. I mean, it's difficult to fade moves. They just seem to have follow through. And I'm still going to say, I know, and the Nigerian brothers look for this stuff all the time, the options. They must be doing really well because the insider trading in this market, I think is just, personally, in my opinion, I think it's out of hand. Not saying the person that was buying Walmart last night after hours knew anything. It could be coincidence. But I'll tell you, on Mile Labs, when we talked about last week, like, some of these are blatantly obvious. And it's starting to just, as a trader here, it disgusts me. It disgusts me when there's traders that, have inside information and then profit from it at the expense of everyone else, because it's just not fair. It's not a level playing field. And I feel like the insider information and the insider trading is out of hand right now. I feel like it gets worse all the time. So I don't know what it is. Maybe, the technology is just better. I mean, if they can hack, and think about everything that they're hacking right now, you can easily hack some of these companies' sites too. There's other ways this stuff can happen, but I mean, if you're going to hack information, why not hack information from, companies that are going to be moving the market, and they make money from that. So the hacks or maybe, the why this is happening. I can't really, speculate on the technology on how they're doing this, but I'll just say it seems like almost every major move, it seems like there's moves ahead of that. So there is insider trading happening all over the place right now. And maybe, you were saying, Joel, maybe it's loose lips, at the executive level. I don't know what it is. And, maybe the Walmart's a bad example because it did have a move yesterday. Maybe it was a follow through. So, but I'm just saying it was trading up last night again, 40, 50 cents. This always seems to be the case. When you get a major headline that breaks the next morning, it always seems to be the case that somebody had it the night before.
Can I make a suggestion? Have you looked at any of Eric Hunsader's tweets at all?
I always watch it. Eric's great. So
I would email him. Send him an email and say.
I mean, on this this isn't the best example because Walmart had some momentum as positive ink. There could have been follow through from last night. A lot of times, how I like my 2-day move. I should have just been, going with my own theory there and just buying Walmart last night because the 2-day move would have worked here, and obviously you benefited from the news of the, $20 billion buyback here, stock breaking out to new highs on the move. And this is levels we haven't seen in a while here, Joel, a couple of years since we've been up over $82.
Yeah, let's just take a look. Pre-market high, we're only 19 cents off that. Pre-market high is 82.62, and I think we are gunning for an all-time high here. That is an all-time high, Dennis. 80.
No, we were in the 90s in Walmart. Go back further. We've been in the 90s. I can remember Walmart at $90. Yeah, there you go. 2015, 90, 97. So you're a 2-year high, but we were up at $90.97 back in 2015.
All right, I stand.
Bill's going to argue with you. You don't have that?
I'm not arguing. No, I got it. I got it right here. No, I stand corrected here. Bunching up. Former high of the move was 81.99. Call it $82. So that was your old resistance. Let's see if that acts as support. And half and whole numbers. We'll see if it can hold on to these gains. I
mean, Jimmy A's making a good point. He says, you don't need a hack. It's like the executives all share their information as well. It's so easy. I mean, there, just with the way information is shared now, if you go back, 20 years ago, you probably know as much insider information. Information wasn't shared as easily. Now it's just so simple. You can send, a message. There's so many different ways to send information along. But I think it's difficult, to come in and, it's the SEC's got a difficult job. We can say, they got to do a better job. And yeah, they do need to do a better job. But it's difficult to just catch everybody that's, doing dirty stuff behind the scenes. So I don't know. It's frustrating to me as a trader to see stuff like that when you always see it. It just seems like, because we've been doing this show 4 years, Joel. And how many times do we say, you see the big move happen, stock's up 10%, and then, especially when stock gets taken over. See a stock up 10, 15%, and then you see the run up the day before and it's up $2-3 the day before on no news. It's like, well, that's obvious. So I don't know. And, maybe the SEC just needs to start looking at the charts and see when you see, a stock that's run up 2-3 points ahead of a merger that's going on, stocks going up 10-15%. Well, who bought it that day? Let's go see who, if there's one major buyer that day. Let's go see if he knew anything. That's the way I would go about it anyway.
It's easy. It makes sense.
It makes me sick that all these insiders are making this kind of money.
Yeah. I mean, especially in people are, that are making markets like yourself or
market makers are killed, but the little retail investors screw too. It's not fair to anybody. If somebody has information and knows, especially on the takeover stuff, we've seen it so many times. I feel like it's half the time. When you see a stock getting taken over that you see a run up the day before. It's not a coincidence. It's not a coincidence the stock runs up 2-3% and then gets taken over and pops 20%. Especially when these things aren't rumored. It's one thing if they're rumored and the rumors come true, but when some of these come out of the blue, and and there's no rumors or anything on it, boom, you see this thing going. It's disgusts me as a trader. So, anyways, that's my rant on insider trading. That's the one thing that really screws everyone. So everyone except who's got the information, the informed guy that's got the information. But let's move on here. We don't have a whole rant on insider trading. It's just, I wish it was not in the markets. But what I was going to start with before I went on the tangent insider trading is it's difficult to fade in this market. It seems like there's so much follow through. And I want to give you the example of two stocks we've talked about on the show for about a week, maybe even longer than that, CVS and Walgreens. WBA and CVS both annihilated the last couple of days. So you had the annihilation the day before, and then again, you got annihilated even farther yesterday. Joel, these things are in full Amazon is coming to eat your lunch mode.
Yeah, and let's first look at the follow through here. Pre-market, we have CVS trading up a little bit here at 74.40, 73.76. Let's look at the daily chart. What you want to do here, you want to see if you can get at least double bottom here under 74. Yesterday's low, 73.78. You had a low at 74 back in January. And this level, I mean, you really got to give it, down to 73 too, because there's another double bottom there. So looking for some support here, 80 to 74 in 2 days. WBA, same case here. That got hit 76 to 70.21. Let's see how it's trading in the pre-market. We'll see. Trading just up a tad, but for these stocks, if you're looking, I mean, you want a double bottom in place, or you want some kind of support before you start nibbling on the long side. And Dennis, I also mentioned to you another stock that's been getting hit for a while, Express Scripts. That's gone from 64 to 59. But, you think about the thing with this company is, at least Walmart and, or not Walmart, Walgreens and CVS, they sell other things. Express Scripts, I mean, that's their business model. But that stock peaked a while ago, and it's been on the decline. And boy, that $59 or $58 level is huge. This is monthly lows under 58 in Express Scripts, so keep an eye on that as well.
Sectors in shambles, we'll just say that. And there's always, and where we started with, it's just the fading. If you're fading moves, you're always getting into trouble, it seems like, in this market, because the follow through is vicious. And things can go for a long time. And, even talking like the influence, that, and maybe it's the retail trader that's just making such a bigger presence, but these moves from, these fast money hosts are incredible too. Bring up CY, Cypress Semiconductor here. This stock is trading up 50 cents here this morning. If you're scrambling for a headline, I'll tell you why it's up 50 cents. Guy Adami pitched this, he liked the chart. This is another thing, and it just goes, and it goes on big volume. It's like, I respect Guy Adami. I respect these guys' opinions on fast money. But these guys on fast money, it seems like, are more influential than analysts now. If Cypress caught an upgrade from Deutsche Bank or something, I don't know if it would be up 3%, but Guy Adami likes the chart. It's up 3%. So I'm not sure if that's just a retail presence, but this fast money, you got to watch these guys. These guys are moving markets now. They never moved them like this, because I've watched fast money for years. And, I have it on because I'm trading after hours, and I have it on. I listen to those guys, and I know a couple of those guys. Some of the Jerry brothers are great guys. They are influential right now. More influential than they've ever been. So I'm not sure if everybody's just, such a bull market. People are watching and glued to their CNBC at night, and they start talking about a stock, and they're all hitting the buy button. But wow, for him to move a thick stock like Cypress Semiconductor up 3.5% because he likes the chart, that's impressive, Guy Adami.
Nice move, pre-market high, a 16.10, but only 7 cents off that. Last trade at 16.03. We haven't been up in this area in Cypress. This was once a major high flyer here. Ooh, 16.25. I'll keep an eye on that. That was your high back in March of 2015. Right now, where we're trading, if not, 16.5, 17, but under 16 could have some downside here in CY.
And chip stocks are hot this morning. There, it's a good point being made by Spinner in the chat. But CY took off before the Nvidia news. CY, I watched it last night. I was watching CNBC. CY was literally just sitting there at 15.53, and Guy Adami pitched it and ran right to 16.10. And I was trading actively up over $16 last night after the pitch from Guy Adami. But, there is big news here, which we haven't said this morning. And just before we get to our first guest, give us the Nvidia news here, Spencer, because Nvidia's up 4% on a new chip.
Yep, new chip for an autonomous delivery truck fleet is what it is. So another chip out of NVIDIA.
Autonomous cars.
Yep.
That's what the market wants to see right now. Anything autonomous, they are rewarding it. It doesn't matter if there's no product coming. It just matters that you got a chip there that's ready to go. NVIDIA getting rewarded here this morning. Stocks in new all-time highs. We said it yesterday or 2 days ago or 3 days ago on the show when Netflix got up to just over to $190. I'm it looks like it wants to go 200. Did not quite get to 200 yesterday. Got to 199.40. So I would have lost the bet if you would have bet with me, Joel. But I'm saying Nvidia right now at 193. I think it's going to trade 200.
194. That's your pre-market high. Double tap there. Base is the 50. I know you're not in a great mood. I won't take that bet, but I don't think it's going to get to 200 today.
No, I'm not saying today. Definitely not.
okay.
Joel, see how he's sneaky like that?
I thought you said
I
today.
didn't give it a timer, but Joel's like, let's see if we can catch him on a bet here.
You're all cranky.
I am cranky. The insider's got me cranky, Joel.
Okay.
All right.
All right. We'll let you take a little break then.
Yeah, we'll let you take a break, and we'll go
I
grab
gotta calm down.
grab our first guest. You can calm down during the segment. Will Rhind is our first guest today. He's the CEO of GraniteShares, a commodity-focused ETF company. So we'll be right back with Will Rhind. Welcome back, everyone, to Benzingo's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick, and we're on the line with Will Rhind, CEO of GraniteShares. Will, how's it going today?
Very well, thank you. How are you?
Doing pretty well. So tell us a little bit about GraniteShares. I know you guys are a commodity-focused ETF firm, and you have ETFs that are focused on various commodities, metals, oil. But tell us more about the firm.
Sure, happy to. So GraniteShares is an ETF company, and we're focused on the moment disrupting the commodity space. And what that means is solving kind of two critical issues for investors that have existed in the commodity space. And those have been funds or investment vehicles with high management fees, and ones that have been poorly structured for investors, meaning they're either taking the form of partnerships that distribute K1s around tax filing time, or they're notes issued by banks that have credit risks to a respective bank. And so what we are trying to do is really offer a low-cost fund platform structured without K1s for investors. And so, we think that is kind of the big thing that needed to be done, the white space, you might say, within the commodity world. And certainly, if your listeners out there have dabbled in commodity ETFs before, they'll know kind of what I'm talking about, some of these challenges.
Give us your thoughts on some various markets right now. Let's start with oil.
Yeah, so if we take a step back, the reason why we chose to start this business with respect to commodities, we felt like commodities is one of the probably the most or the major asset class out there that has been worst affected by performance over the last few years. So we've had a terrible bear market in commodities. That is now starting, in our view, to turn around. And oil is one of those key components. I mean, when we launched our first two funds, COMB and COMG, back in kind of beginning of June, if you'd asked me then what our sort of short-term view on the oil market was, we'd have said that, or we did say that we expected actually prices to move up. We were quite positive on the sector, and the reason for that was that the market was just so oversold, and people were just so bearish on oil and the energy complex, more broadly. And literally within a couple of months, we've had a couple of things: the OPEC cuts, really starting to take a bite into production, and of course they were trying to really decrease annual production by putting in quotas for their members to try and cut production. And then we had the hurricanes, these very, very large hurricanes or weather events that have hit the United States, taking out refining capacity. And then when the refiners came back online, that affected about a third of U.S. Refining capacity. When those refiners came back online, that really gave a big boost to demand. And oil prices have reacted more positively from that point. So I think there's some good things to talk about with oil, and certainly coming into now, although depending on where you are, it doesn't seem that cold at the moment, but coming into the winter season, we could see further uplift for oil.
What about gold? Gold's had a pretty good year. Thoughts on the next 12 months for gold?
Yeah, I think the major thing with gold at the moment, I'd say that it's really acting more of a currency for people. And what I mean by that is gold has kind of stuck in this trading range. I mean, again, hasn't been immune to the commodity bear market, and certainly has or is trading still significantly below its kind of high of over $1,900 an ounce. But I think the play for gold right now is we're getting a lot of inquiries from investors looking to hedge themselves against a possible market correction. And so the stock market seems to hit new highs almost on a daily basis, and that's been going on now for almost 10 years, since the financial crisis. And so people are now really starting to think about the value of uncorrelated asset classes and thinking about how to diversify themselves. I think gold is one of the standout ways to think about doing that. So I think gold has definitely benefited from that. You also have the weaker dollar. So the dollar has been a huge headwind for commodities over the last few years. And since the beginning of this year, you've had a dollar that's been on a downward slope, on a weaker trend, and obviously specifically to gold, geopolitical tensions with North Korea and other sort of events in the world really helping to sort of bring that to focus in investors' minds. So I think on gold specifically, we're positive on that. And we think that the price of gold does have room to move up from here, especially if the weaker dollar trend continues.
Question from our chat here: is silver a good long-term investment?
It depends sort of where you're coming from. I mean, silver has typically been a sort of more volatile version of gold, in the sense that if you look at long-term performance, typically they kind of move relatively together, and silver just tends to be a more volatile version of gold. So I think if you're bullish on gold or you have a positive view on gold, then silver is one way to sort of express that view, that maybe with a bit more volatility, including a bit more risk involved. As for its merits of being a long-term investment, I'm not sure I can sort of qualify or comment specifically on that. But I think typically the way that people view silver is kind of a more volatile former version of gold.
Will, one question for you. Commodities, shouldn't be anybody's portfolio. Is there, or do you think the opposite? If you had $10,000 or $20,000 or $50,000, you think that there's a point where investors should start using the commodities as a hedge?
Yeah. So I mean, my view, first of all, is that commodities should be a part of a diversified portfolio. So it should be part of everybody's portfolio. And I know you've had a lot of well-respected hedge fund managers, et cetera, likes of Ray Dalio. People come on saying that people should own a significant portion of their wealth in gold. But to me, our main sort of audience or investor base are asset allocators. So people that practice a sort of diverse approach to portfolio management. So typically those are people that own equities, bonds, and also commodities. And the reason for owning commodities really is fairly straightforward. The benefit to an allocation of commodities is it has a lower correlation to equities and bonds, meaning it doesn't really move in the same direction. So when you add that to commodities and bonds, you can decrease the risk the risk-adjusted returns of the overall portfolio. I think from that perspective, commodities make sense. The other reason why people like commodities in a portfolio is because they're a hedge against inflation, or have been a hedge against inflation historically. And people are starting to talk much more about potential reversal of this kind of secular trend that we've seen in terms of disinflation over the last 40 years. And so people are starting to think about, with potentially rising interest rates, the impact of potentially rising inflation on portfolios.
Will Rhind has been on the line with us. He runs GraniteShares. He's the CEO there. They've got a few ETFs, COMG, COMB, and BAR. BAR. Those are some of Will's ETFs. Will, thanks so much for hopping on today.
Thank you so much. Great to be there.
All right. 8:20. What time we got, guys? 8:26. What? Did I miss anything? I say we're talking about Amazon in the chat. What's anything doing?
Well, let's go talk. Let's move over here. We talked NVIDIA. We didn't talk Tesla. I mean, Tesla, TSLA. Obviously, everybody thinks they're going to lead the charge here for autonomous cars eventually here. I'm not sure if that's the only news, but Tesla is getting a $4 pop here. I think it's probably lifting on NVIDIA news. I didn't check those specifically for Tesla news, so maybe you want to look in the background. But Joel, give us quick technicals here on TSLA. I mean, we've been kind of wild here the last week. We got all the way down to 331, and then it rallied all the way up to 360. Then we pulled back at 342. Now we're 346. We're kind of stuck in the middle. What are your thoughts here? Yeah, we're really going nowhere, but we're chopping around doing it.
Yeah, nice volatility here in Tesla, getting a pop in the pre-market. Pre-market high just over 348. Let's call it 348.35. I mean, really looking at the daily charts here. I mean, you can look at yesterday's high, and that could be one potential point. If you're looking for another target at 51.75, also a little gap fill. But boy, that 360, that's your 2-day high. That looks like it's going to be the longer term resistance. That's actually 360.10. So keeping an eye on that, and looking for continued follow through, and need to take out 42.94. That was the low from yesterday.
Spinner is saying that Morgan Stanley did raise the price target as well.
Yeah, that happened. It was 317. Now it's 379. But also, Tesla's being investigated by a law firm for reportedly delivering or people bought fully self-driving cars despite the fact that wasn't even available yet, and so they're being investigated by a law firm right now. So I'm not really sure the implications of that or why, but they're encouraging.
Doesn't seem like much because stock's up $4, so it doesn't seem like they're too scared on that part.
They're encouraging investors to contact the company. But
jump over to these airlines. Spinner's got all the news here today. We're looking here at the airlines, and we've been talking about them. How when the market turns, the momentum starts turning. I mean, you could not fight. Going down here 2 months ago, these airlines were just going straight down. They could not catch a bid. It didn't matter what they said. They just kept getting hit. And they turned, and they all turned at the same exact time. And you can go right to that date, and that was on September the 6th. When we turned, Delta made a new low. Got a few people maybe playing it through the new low. Turned around that day, actually closed higher. And if you look at all the other charts, they all coincide. Same day. September the 6th was the low. And since then, we have been rallying up on these airlines. There's some numbers here this morning coming out from UAL and AAL. UAL is trading up 3.5%. American Airlines is trading up another 3%. The airlines are hot again, Joel. They're flying again.
Just look at your pre-market highs. These are big moves. 52.50. This is what I like to do. I like to see where we traded in the pre-market. Then go to the daily charts and see if you got anything at 52.50. Did have a high just under 52. 52 even on August 1st, and then you had a high at 52.78. So if you're looking for continued follow through 52.5, 52.78, another high at 53.02.
All these airlines are sort of looking good. JetBlue is approaching the $20 level. Save, which is the one I own in my investment portfolio, I was a little bit early. I should have waited, I guess, until the momentum started turning. That looks set itself well here too. I mean, we've kind of held the 35. I think this is one that could pop here today too. So I am talking my book here on this one because I already own this one. I like this SAVE chart. And I think, these airlines are hot again. So it's hard to fight the tape. Once momentum starts going in one direction, it goes that way for a long time. Lots of upgrades and downgrades here. We can get to those in a second. I first want to go over to AIG, though. They gave some estimates there on their hurricane damage. Spencer, throwing you under the bus here there, but you got the estimates there for AIG. I think they said they were going to lose $1 billion or somewhere in that realm from the recent hurricanes.
They're going to lose 1.1 to 1.2 billion is the pre-tax estimated loss due to a Harvey. And then Irma.
That's just Harvey.
That's just Harvey. Another 600 to 700 million from Maria, and another 150 million due to the Mexico earthquakes. So
okay, so a couple billion or
so
a couple $1 billion when you add all that
about
up.
3 billion is what it comes out to.
$3 billion. Okay, so they are hitting AIG on this news. I don't think, I can't see it turn around and getting annihilated, though, because you knew these numbers were coming. I don't know where the estimates were. Maybe it came in higher than the estimates, but all of these insurers are going to take a hit there from these hurricanes. It did a hell of a lot of damage. They were getting hit hard. Remember, going into the hurricane season, they were all getting hit hard. So I don't know. I look at it down at $1 here this morning, AIG, and I think $60, man, if you could ever get back down there, I think you got some major support. And the bucket, the trend had actually turned here. So I like AIG in the lower 60s.
Getting hit on this. Not a lot of stock traded at your pre-market low. Your pre-market low is 60.32. That might even have been an odd lot. So we may not revisit that today. Going on the daily charts, it was just getting back some momentum, trying to go back to the 50% of the move. You had about a 10-point move. So that did do 50%. That took you up to the $62 area. But you could see the low right at 60. I think that was 60.01. That was on September 26th. And then it's supported by a couple other lows in that area. So I think maybe anything under 60.25, you'll find buyers here in today's session. And you said, Dennis, they're coming out, they're, revealing they have billions of dollars in reserves for these kind of things. And it's the first one to really come out and let us know what potential.
Well, there's been a few. Travelers came out a while ago and they did hit that. And then, some of these reinsurers, the reinsurers are the ones that always get hit the most. And, a lot of these stocks, when you look at them, they really haven't come back, from where they were. You can bring up a stock like Everest RE. That was up at $270 before the hurricane started. It's down here at 226. They know some losses are coming for these companies, and some of them have reported them, some of them haven't. But some of it is priced in. AIG, was $3 billion priced in? Apparently not, because the stock is trading down. But I just don't think it's like, whoa, we didn't expect this. The market's expecting this from these insurance companies. That's why I don't think they're going to get punished to a point where they're going to just be annihilated. Even when Travelers came out, look at TRV. It came out and it was down a few bucks that day. I think that was the day it maybe even fell under $120. It's back here at 125, so it's climbed right back because they knew. They know there's some of this coming here. So that's why I don't think I'm coming here and selling AIG, because they're reporting a $3 billion loss from this morning. I own AIG in my investment portfolio. I think it's actually an opportunity on the pullback to buy it if it gets overdone.
What was that one insurer you wiggled out of?
AHL, and I'm out. So, and you know what? I sold 43, and that was when the rally was just ridiculous. So the hurricane, it was maybe the sell-off was ridiculous too. They hit the thing down like 30% ahead of the hurricane, and it popped when Hurricane Irma didn't do as much damage as expected. That previous day it closed down there like $35. It popped to 43.70 the next day. It opened up around 42.5. I sold the opening print because I'm like, this is going to pop $7 back all of a sudden. I'm like, I'm out. So I sold it, and it drifted down after that. It's been kind of trying to come back up here too, but I just got a bad taste in my mouth after that. If we think these storms are going to start to get worse, and I know we're going to come out of hurricane season, so maybe you're going to get better timing for this next year. But if you keep thinking that the storms they were bad, and if you believe in global warming and believe that the water is warming down, and these storms are going to get worse, these are the companies that are going to take the brunt of it. So I was like, do I really want to own these in my investment portfolio, especially after looking at a stock like Aspen Insurance that was $50 go down to $35 because the hurricane was coming? These stocks make money 99% of the time. The 1% of the time, they get annihilated because of a bad storm. So it's like these stocks are like in the business of like writing puts to the market, really. It's like being a put writer. It's the same strategy, really, just with a different tool. If you're writing puts all the time, you're getting paid 90, 95, 98% of the time. But that other 2% of the time, especially if a black swan event happens, you could get wiped out. So, if you're just writing naked puts. That's why we're going to have Nick Chahine on here in a second. It's perfect timing. That's why Nick doesn't write them naked. Nick always writes them, he doesn't write them open-ended. He always, buys another put to protect himself in case the black swan happens, and that's the right way to do it. Let's bring Nick Chahine into this conversation because I think this is something that he'd probably like to talk about as well.
All right, bringing Nick into the conversation.
Good morning.
See if he was listening here. Nick, were you listening to the conversation that I just had here? And I was comparing, I don't know, were you listening first of all?
No, because...
Okay, so I'll just recap.
Then we get feedback and all of that. So
okay, right. So I'm just going to recap what I was just saying. I want to get your thoughts on this too. So we were talking about, the hurricane stocks and AIG report 3 billion losses. Then I got into this rant on the reinsurance companies because some of those reinsurance companies on the last hurricane were down as much as like 25-30% ahead of the hurricane. It didn't hit as bad, so they came back a bit. But I just compared them to people who are just writing naked puts in the market all the time. And that works like 97, 98, 99% of the time. And then that 1% of the time they get annihilated. And that's why I was giving you some props, because you are the person that protects yourself against these events. You never just write the put naked. You usually buy yourself a lower put to protect yourself in case of that black swan event. Is that correct?
Yes, especially if it's a stock where I don't see actual value. A perfect example is I did it in Twilio. It was reporting. I sold a naked put, but then I bought a 5-cent put for that week. My naked put that I wrote was, I think, October, which is a few months out. And then I bought a 5-cent put. Well, the next day it dropped 25%, the stock. So my puts were in definite trouble, the ones that I wrote. But I was completely protected from that 5 cents, which turned into dollars. So at that point, I could have sat and waited to be filled and then converted my puts in, exercised my long put. But instead, I just sold it, collected the profits, and then worked out of the position for a profit. So selling naked puts, you have to do it when you believe in either the price action, but also you have to believe in the value where you're selling. So if you don't think that X, where you sold the put, is a good value for that stock, I think you should protect yourself. Because, for example, in Apple, you can measure a definite value. So if you don't mind owning Apple at 110, it's not a big deal to sell a put there because you just own the stock for a period of time. But if you're ABC stock and you don't believe in that value at that point, then I would definitely, it's your family's money.
I think there's another thing that people get in trouble when they're doing this strategy too, is that they, maybe they believe in the value of it, but they write too much. So, sometimes they'll come in and they'll, all of a sudden, maybe write 10 puts for Apple. And they don't think about, hey, if you actually have to own that stock, you really own, if you've got 10 of these, can you really own 1,000 shares of Apple? So, can you really own 155,000 worth of Apple? Or I guess if you did 110 and be comfortable with it.
Key point is can. So when I usually say you have to be willing and able to buy the stock at that price. Yeah.
Great point there, Nick.
Otherwise, you get margin calls. So even if you have the right decision, the margin call will force you into doing something. They may lock up your account and you only can do this or that. So, I've been through this in my earlier days where I got a margin call on a position where it was sold naked NDX puts and they were hundreds of points out of the money. It was like 1 or 2 or 3 or something. And it was a smaller account. I was out of town and out of the country. And then I get a margin call. And then they force you to do something. The position was fine. It's just that their leverage changes overnight. And if the VIX spikes, then they tell you, okay, well, the margin was this, and now we doubled it. And they don't have to say why. Then you have to come up with the money.
So just don't get too big. And that's, an error that I've seen a lot of traders make, even just day trading. They get too much in one stock. Stock ends up coming out with bad news. And sometimes it can come intraday too. Usually if you're not holding overnight, you're okay because most of the time the news doesn't come out intraday, but sometimes it does. And you'll see, a trader, and Joel, you can probably attest to this too, running the Bright office all those years. There's always seems like some person, it's doubling down. And, they end up, getting, a huge position on it they can't handle. Stock opens down 10, 15%, and they get wiped out.
Yeah. And then also what happens is sometimes they write a put and price approaches it, they roll it down and out or just down, and then they see themselves, okay, I better increase my exposure in order to, quote, make up the difference. Like if the roll is a debit, they increase contracts to make it a credit or break even. It's like, I don't do that because then you just made your problem bigger. You had a problem, now you just made it bigger. Okay, you're trying to manage out of it, but there's no guarantee you're going to come out of it. So you had a problem, you make it bigger. It's it's a fine way of making a living, especially if you don't mind buying the stocks, but you really have to know where you're selling your puts. And by where, I mean ticker and location as far as price action, value, catalysts. I usually don't like to sell puts into catalysts because it's binary events. People say, well, that's when the VIX is high, or that's when the implied volatility is high. Yes, but it's high for a reason, because it's riskier than the norm. I like boring trades where you set it and forget it. Perfect example. I was selling positions in the last couple of weeks, and then I got nervous about one or two of them, one of which was Tesla, and I said, you know what, I'm out. And I got out of it. And Tesla took a tumble yesterday. So also you have to put in some gut feeling in there.
Nick, thoughts over here on the overall market, S&Ps? We have a potential double top up there, 2050 and a half, 5075.
Okay.
We also kind of put a double bottom in yesterday. It's a little bit of a springboard here. Give us your analysis of the S&P 500 futures.
So we talked about this and double tops and all of that. In order to have a top, I think you have a reason why to think it's a top. And I don't know if we have a reason. Right now, we're shrugging off every bad thing. Range is tight. Move is coming. I was looking for a breakdown below 40 on ES, 25, 40, 39 to 36, and then lower to 32 maybe. But what's more likely, us to drift higher or lower? Bank earnings are coming this week. They are a big part of the market, especially in the small caps. I don't think they're going to say, oh, we're running out of money or things are not looking good. They're going to deliver what they promised. And even though the open interest suggests that the lower path for banks is a lot easier than the rise on earnings because of the open interest that's currently in the market, that's just a suggestion. It's not a rule. It's easier to go long than to short. How about that? Can I say that? It's a lot easier to go long than short. And it's a lot easier to conceive that, okay, they're going to break out again into the 2560 plus versus the 2531 or 30. That's my opinion. So I would rather go long than short. And if I'm selling short, I want a lot of room, and I definitely want it hedged by some longs.
All right, let's move over to the gold market here. You've been keeping an eye on that, and I thought I was leading on that double bottom there, and it got taken out, went all the way down on the jobs day, down to 1262, though. You stuck with your position, though. I think you stuck through that, and now you're sitting on a nice winner here. Gold going up with the market. What do you think, Nick?
I had an iron condor in gold, and then I closed the credit call spreads when they won, and then when gold fell, that was months ago, I added to my credit put spreads, and then when it rallied, I added to my credit call spreads, and then when it fell, I went long gold by selling some credit put spreads. So long story short is I made money on gold on every which way it went. And then recently I just bought naked calls. In fact, I bought a calendar last week. I sold last week's calls against longer November calls, and the calls expired last week for maximum gains. So I got myself into long calls for cheap, and I got out of them yesterday. Maybe I got out too soon because gold looks like it's still swinging high, but I had fast profits over 25% in just a couple of days, and I usually like to book those just in case.
So you're flat now.
No, I'm not flat. I got out of the naked calls. I still have some credit put spreads and credit call spreads that are decaying in my favor.
Okay.
But the credit call spreads are in the 140 zone, and the credit put spreads are way below current market. So I don't think either of those will be breached. I manage them closely, and they're nowhere near the hot zone in other words, the delta is so low that there is no imminent danger on either side.
So you're just waiting for the premium to evaporate?
To just decay and go away, yeah.
Yeah, okay. Crude bouncing around. Thought we were going to break out. Came back to 50. That just seems to be a magnet here. Couple lows just above 49, back in the $50 handle. Anything to trade this choppy market?
Well, I can tell you, crude, I don't know where the mystery is. I hear these, quote, experts on TV, and I read them in the news and the write-ups. Where is the mystery? It's not going to go above $50 the early 50s for too far, and it's not going to collapse. OPEC doesn't want that. They're still a big player. We are big and bigger perhaps here in the US, but that's the reason why it can't go higher. Math doesn't allow it to go there, nor do they want it to go. Notice how they stop the rhetoric as soon as the breach is 50, because OPEC, because it hurts their market share. They fought hard for this market share. You remember when crude fell into the 30s? They caused that in order to get the market share back, because as soon as the crude collapsed, everything else stopped pumping. All the rigs went away, and not the rigs, the new places that were pumping, they kind of like packed up and left. Well, as soon as it gets to 50, 52, it starts making sense for them to get back pumping, so they lose market share. But they lost a lot more than oil money there, because they required oil money to fund their socioeconomic programs in the OPEC countries. So they got hurt badly economically. The industry won, but not their countries. So they're not going to let go of that market share. So anytime it approaches 52, don't chase it. That's the only thing I can tell you. And when it falls too low, I go long by selling puts in the USO.
Nick, let's jump over here into some other movers, and I want to get your thoughts. We talked NVIDIA off the hop, but we got to talk it a couple times on the show because it's making out and breaking out to new all-time highs here again this morning. It's up $7 on a new autonomous chip here. This is a stock that has been an absolute monster for about 2 years here now. It seems like nothing can stop this rocket ship from keeping blasting off. NVIDIA, thoughts on as it makes new all-time highs?
Yes. Well, it is running on promises, and there's no way I would short it. Let's put it this way. I did short it a couple of times successfully, but I got lucky. That was when it was, I think, under 100. You just have to either plug your nose and buy it and hope for the best, or wait for better entry points. I personally don't chase all-time highs like that, spikes this big. There are a lot of other quality stocks that are maybe better deals. So I avoid chasing all-time highs. But if you're on board, there's no reason why you should get off it. And lucky you. And if you're not, don't try to short it just because it's so far. And if you short it, you're basically shorting the market in general, because it has so much going for it from the standpoint of people believing in it until they stop believing in it. So until then, it's not shortable. And if you're on board, don't book your profits. And if you're looking to get in, this is not an obvious entry point.
Nick, let's go talk on the other Momos, the FANG, and I know you'll have the FANG chart for us. I'm not talking the Diamondback Energy. I'm talking your Facebook, Amazon, Netflix, and Google. And if you look, Facebook's within striking distance of all-time highs. Netflix made a new all-time high yesterday. Amazon's right below the 1,000. It wants to go through it. And then Google is kind of within striking distance of all-time highs here now. Give us your charts here on your FANG as you put this together.
Well, the gang is doing well, and the one thing I didn't like yesterday is that they were all much better during the day, and then they faded. Like, I think Netflix had a high yesterday and then closed red, maybe. So it is that I don't like to see that. So you've heard rotation. Banks are reporting this week. If they rally, where is money going to come from? I'm not sure. So it's going to have to come from somewhere. So bulls are not, the reason why we're not skyrocketing to all-time highs after all-time highs in a big way, we're inching into on the S&P, for example, is because everybody's saying rotation, which means that money comes out of somewhere to go into somewhere. And so the money has to come from somewhere. Maybe it comes from the FANG. I'm not sure. But I think valuation, the banks are so cheap that if they do well this week, that might take away some money from the FANG. No reason to sell them, but pick your entry points. So don't trade them as a bucket. I wish they never did that FANG thing, because I don't believe Google belongs in a basket with Netflix. They are nowhere near.
True.
I mean, Google is a solid. Google and Apple should be in the same basket.
They're value plays. They're a little bit of like value growth.
They're money-making machines. Their thesis is not in doubt at any point in time. Netflix's thesis is so much in doubt. Everybody gives it the green light, saying, "Oh, it's on rails." It's not. Look at who's coming after it: Google, Facebook, Amazon, Disney. Did I miss somebody? Apple. I mean, these are not easy competitors. They're all coming into this arena, and everybody is like Honey Badger on Netflix. It's like, I can't believe you don't see the danger. So it does not belong in the same basket with Google. So the reason I say this is because on bad days now Google trades like a Momo, and it shouldn't. So that's an unfortunate situation. So on Google, I would pick entry points. Long term, it's a winner. And it has several platforms with 1 billion users, and it's only monetizing one aspect of it. So as soon as it starts monetizing YouTube, for example, I will be subscriber of the YouTube streaming service as soon as I get out of DirecTV. I think it's $35 a month, and it gives me up to 6 logons anywhere on my regular TV, on my computer, on my phone. It doesn't matter. So I think I'll be going that way.
Nick, couple stocks from the chat, then we'll let you go. DC1 wants your thoughts on REGN, Regeneron.
Okay, biotechs are usually not where I'd like to sell risk because of they are prone to headlines. Regeneron looks like it's coming back. It has had a good run technically. It filled a gap of sorts. I don't know why the gap happened. It was on high volume. But now it's approaching a level where it's, oh my gosh, this is pretty expensive. So 480 is somewhat of a test level in my opinion. And over the long run, it has had battles over it. And usually when you trade around a price, they tend to remember. In other words, the same people that traded it there will be trading it again. So back in 2016, January, they lost it as support. But before that, they had, I think 2015, April, they broke out of it. And then in January, they lost it. And it took them a while to get back to it, burst above it, and then below it. And here they are back at it. Range is tightening. So maybe another dip a little bit before they can go higher, but there is a lower high trend. So I wouldn't chase it until it breaks 480. That's personally. If I'm on board, maybe I protect myself a little bit. Maybe I trim a little bit to see what happens around 480. And it's not one hard line in the sand. It's just an area.
Nick, Spinner's asking about the premium in the USO. So are you, when you're going into the USO, are you actually buying those options with spreads, or are you trying to find some premium to pick on?
I sell naked puts in the USO just because it's so low priced. I feel like my damage is contained, and it's not going to go to zero. And I've been lucky so far. I've been on record here over the last, I think, year or so saying when everybody says oil is going to the 30s, that's when I know I sell puts in the USO, and confidently so. I think I sold puts down in $7 range, and somebody paid me premium for it. I can't believe they did that, but they did. So that's how I do it. I sometimes buy calls with the money I buy to sell the puts for, so I'm basically buying calls for free, but I don't necessarily believe in the rally. I just don't believe in the crash in the price of oil.
We've been on the line with Nick Chahine. He's the author of Create Income with Option Spreads. Joins the show every Tuesday to give us his fundamental and technical take on the markets. Nick, thanks a lot. We'll speak to you again next Tuesday.
Sure thing. Can't wait.
All right. S&P futures just creeping higher at the highs of the session. 25.4850. That's your high. Last print is 48.50 right there. Just real quick, Intel, that was another one Nick had talked about. And Dennis, you talked about that too. There was a bunch of highs. Yeah, you did. Oh, look at that. Intel, boy. That was a breakout. Look at that. You had 1, 2, 3, 4, 5, 6 highs in the same area. Cleared that. Never looked back. Let's see if we got 40 on the mind today.
Well, it's kissing up over 40 right now in the pre-market. I think it'll struggle to open over 40 because I'd imagine there's some size there, just because 40 has not been there yet. So I know it's bid 40 here right now. I think it takes it out. I think it goes over 40 today. I think it might open. I'm going to call the open. I'm going to call the open 40 right on the kisser. I think there's some buyers at the open, but I think there's also a big probably block there. It's got to get taken out. So I think the stock opens at 40. If it takes out that $40 seller, which I believe is there, then I think, we can move higher. I've liked Intel for a while. I still continue to like it.
All right. Imbalances, how we looking?
Bank of America, 267,000 to sell. Financials looking a little bit light here this morning if you're looking for a sector that isn't performing that great. Alibaba, 67,000 to sell. going the opposite way. Square are guys there every day. There's a buy imbalance in Square. It seems like every day for the last month, and this guy is making money because 113,000 to buy here again this morning. Stock trade up at all-time highs again yesterday. So I've just been buying a block at every open for the last month, and it's paying off because if you look in the last month, 26, 27, 28, 29, 30, 31, that institution is making a lot of money by buying those blocks every morning. General Electric, 482,000 to buy in GE, and GE got killed yesterday. I don't know. I might be fading that, though, because I think this is one of those that is broken here right now. Unless this was a fake down yesterday, which, sometimes you get caught. I think you could see follow through here. I have no position in it. Right? Well, I have my investment position. But, I'm still just, long-term investment position, but no trading position in GE.
It looks like you got a 10-day winning streak going in Square here. So let's see.
It's been a monster. Yeah, I still like it. I like it a lot. I'm a buyer of pullbacks on Square. Don't own it. Wish I did.
Yeah, maybe we will get a pullback. And Jeremy was real bullish on that yesterday as well. I really enjoyed that chat with Jeremy Newsom. We touched on ratings, I think, near the top of the show. We got about another minute and a half here, Dennis.
We didn't get to too many of them, though. Spencer, just fly through if you want here in 2 minutes. What are the major ratings here?
All right, let's go through my list here and see what's notable from today. What jumps out to me? As far as upgrades, not a whole lot. Morgan Stanley had a note on some cybersecurity firms. They're upgrading Palo Alto and VNO, and they're downgrading. Who are the two they downgraded? They downgraded Symantec and Qualys, QLYS. So sort of a pair trade there from Morgan Stanley. As far as other upgrades, though, nothing really to speak of. As far as downgrades, we have not a whole lot.
The big one's Lilly.
Yeah, Eli Lilly, I mentioned on the pre-market show. That's a downgrade.
That's a big one.
That's a downgrade from Credit Suisse.
Down $3
to neutral. That's neutral. Credit Suisse is Eli Lilly. But as far as downgrades, though, that's really the only one.
Jabil Circuit down at Goldman.
Okay, yeah, Goldman, Jabil, but nothing really. There's some interesting initiations too, but nothing really super out there.
Let's go to the Lilly. It's down to at $2.80 right now. It's a big move for Eli Lilly. Stock has been climbing. Kind of had a blow-off high, 89.09 2 days ago. And if they were buying that breakout there, they're getting hit now. Stock way down at $84.21. Actually looks like it's breaking that uptrend there, which is concerning. This is a big move on a down. Is that the only news on Lilly today? Just a downgrade's got it down $3?
Let me check for you right now.
Is there anything else? Just check, make sure, because that's a big move.
That's a huge move for Eli.
Oh, they actually had some drug news, which I missed. I did not see that until just now, so good catch there.
What's the drug news?
They report their top-line results from the Phase 3 Juniper trial, and it did not meet its primary.
There you go. Okay, I was going to say, because that's a big move off a drug, or off of a downgrade. So looks like the drug news here knocking Lilly down here this morning. It's down $2.80.
You do have a couple lows right here in the $84 area on September 25th, 26th, and 27th. 380, 401, and 397, as well as 84.15. That's where you're at right now. So keep an eye for some follow through the pre-market low, trading at 84.25. If the decline continues to that $84 area. 82.74. That was your low on September 22nd. But man, you're thinking 3-4 lows in the same area. A quick drop from the $87 area. I mean, if someone has this overnight short, you're not going to get much better news than Lilly down 3 sticks.
1 minute here left. So that's pretty much, if I'm just looking for themes here today, it's mixed. Oil we haven't talked much about, but the oil is up here pretty substantially this morning. So here seems some oil stocks catch a bid. Chevron, Exxon, XLE is trading up, XOP is trading up as well. So I'm looking for sources of strength. I am seeing some in oil. We already talked about the airlines. You often think that the airlines will move opposite to oil. It's not the case because we got some data from UAL and American Airlines this morning. So airlines are popping here as well. And just looking, really, that's the only thing really jumping on me. Gold's a little bit of a bid here. And then, the individual news, tech stocks are hot again because NVIDIA with that autonomous chip.
All right.
Go ahead, Spence.
Looking ahead to tomorrow's show, we're going to be joined by Greg Harmon. He's the founder of Dragonfly Capital Management, 25 years as trader. He's also the author of Trading Options Using Technical Analysis to Design Winning Trades. So Greg will be on our show tomorrow. As far as today's show, you can catch the whole thing again on the podcast. It's on iTunes, SoundCloud, and Stitcher. And this show itself is on youtube.com/Benzinga TV. Don't forget to like us on Facebook as well for some more content. The show is posted there on Facebook, and also Joel does some update videos during the day as well. So that is our show for us today. Hope you guys enjoyed it in our chats with Will and Nick. We'll be back with you folks tomorrow. In the meantime, have a good day.